All right, Doug, it's been an eventful couple of weeks since we last talked and caught up. A few things have happened. Contrary to your conviction that Bitcoin is 100% going to hit $10,000 again, it inexplicably hit $30,000 yesterday. So, being that it did that, what are your thoughts now? Because you're sort of the perma bear of our group, of our crypto group. So, I'm wondering how deep your perma bear genes go. How are you feeling these days?
Well, I'm doing good, man. I want to clarify, I guess, first. I never said 100% going to 10K. I had a strong conviction. And then I also don't want to disrespect Rob and Chris. I will very humbly take third place Perma Bear in our group, but I definitely will give first place to Rob and then Chris. But yeah, no, man. Like you said, it's been a crazy 2 weeks, man. You know, in crypto, a day is a month, and then a week's like a lifetime. But yeah, there's so much going on. But yeah, obviously the headline right now is 30K. I believe this past week too, in tandem, gold hit 2K for the first time in a hot minute. Um, obviously, I'm still on that 10K bandwagon. But yeah, we broke 30K, which I think for us is like going almost on a year all time high. Short term is exciting, man. Obviously, I'm not against it. I'm happy it's up. With that said, in the past week or so in the chat, I know uh, Greg and some other people were like, "Oh, we broke 30K. What does everyone think?" And I went to the charts. It's just TA after all. But basically, in the last 18 months, we've hit 30K about six or seven times and bounced down. And I've said this before too. You know, there's a lot of macro stuff going on. We had the whole Balaji bit. And I guess my first gut reaction synopsis is I don't see my grandma and my coworkers like, oh, my rent's up, inflation's up, 36 eggs is $20 at HEB. I don't see them running to Bitcoin as a safe haven. Obviously, there's whales in the group, which anyone at home listening is very much aware about how much just in macro markets, let alone in crypto, how much they influence things. But I think part of it's FOMO. I think maybe there is some institutions and just normal plebs like us, just like, hey, these idiots in DC don't have a clue. Let me hedge myself. My first gut reaction, I think it's FOMO, and I think whales too, because again, it's TA, but in the chat, everyone was going off. And I'm like, let me just do a little bit of homework. And we've hit this pretty hard about seven times, like I said, in the last 12 to 18 months and rejected it. With that said, I'll swallow a little bit of humble pie. A month from now, let's say we hit this end of the week, we maybe go to 25K, we hit it again, let's say going into the first or second week of May. If we break this and hit like a solid 35K candle and then bounce down to 30K, I might swallow the humble pie and be like, okay, I don't know if we're going to Balaji's $1 million, but we could be off, like slow then suddenly, But I'm still reserved right now. But like I said, I'm hoping on not hoping on 10K, but like I said, I think we still need another month of price action. But yeah, I am surprised we're doing this well, for lack of a better word.
Yeah, I'm surprised as well. I think I told you in person. I don't think we're going down as low as 20K and to 10K. And I think I told you a couple of weeks ago. I feel a lot more bullish about Bitcoin, and that's not because I feel like, well, interest rates are going to go down and then liquidity is going to come in, and the whole sort of chicken soup recipe of how Bitcoin goes up and down. One of the narratives as well is the halving is coming, and then the long-term hodlers are this much, and then the hash rate is that much, and if you put all that together and you carry the two, that means Bitcoin's going to $1 million. Whatever narrative it is, the reason I sort of flipped bullish a couple, well, maybe 3 weeks ago now, it was around the same time that Balaji made that $1 million bet, and we made a podcast about it. It was extremely surprising with the failure of the banks and this Operation Choke Point 2.0, which I do think is real,
Mm-hmm.
that in spite of all those things, Bitcoin still went up. And in the last few days, it's also sort of decoupled a little bit from the Nasdaq and the S&P, and it's moving in tandem with gold. So one of the things that shifted is, in the past, Bitcoin was thought of as a risk-on asset. Like, if you've got a spare, 1% that you want to put into something extremely risky, then you should put it into Bitcoin. But then, if you don't want to take risks, you should do something safe and put it in U.S. Treasuries, or you just put it in the bank, and because you should just sit on cash and wait for an opportunity to get into the market. Well, we figured out that money in the bank is not all that safe after all, and I think one of the things we talked about on that podcast with the Balaji bet is a lot of people suddenly, for the very first time, realized that with Bitcoin, you have a monitoring network with no counterparty risk at all. If you put money in a bank, well, you are hoping the bank doesn't do stupid things and loses all your money, which, if you were in Silicon Valley Bank, there was a weekend there where you literally thought that this money was just going to go away. There was, politicians calling for the bank to fail and depositors to fail, and it's your fault for not doing due diligence on the bank that you bank with, which is kind of ridiculous. I mean, that's where the banking sector had gotten to, and that's where some of the anti-bailout people were saying, well, it's your fault for using this bank. You should use another bank, even though all banks are in the same exact predicament, and it's just a matter of luck which bank is going to fail first. But in the middle of all of that tumultuous sort of activity, and it was, it was pretty hairy there for a good hot minute where there was one bank after the other. Things have stabilized a little bit, but in the middle of all of that stuff, Bitcoin started doing really well. And my thesis at the time was, has a fundamental phase shift occurred where people have finally realized that now you're working with a monetary asset with no counterparty risk. No one can rehypothecate the Bitcoin you have in your own, personal wallet. No one can just sort of lend it out without you knowing, put it in a different wallet and you don't know. And to what extent did that cause heavy hitters and people who actually understand monetary networks and what money is, hedge funds and the BlackRocks of the world and the Fidelities of the world, etc. To what extent did they finally appreciate and understand that, okay, things are now fundamentally different. Now Bitcoin is not a risk-on asset where, you throw your 1% of like really, YOLO money into, but it is turning into more of a no counterparty risk kind of asset. So, in all of the readings or, the YouTubing and the Twittering, the, talking to other people in the blockchain space through our group, of all of that you've done, have you noticed at all if this sort of shift in thinking has occurred, or am I just sort of drinking my own Kool-Aid here? Which I could be.
No, that's a good question, man. It's like especially definitely since January, I've been asking myself that because everyone gets in echo chambers really quick, and even though we have a really diverse group, everyone there, even the main like 20 odd people, we're still into crypto, and you have everything from Chris, Rob to you and me to Kat to Carl, Sanat. Like we got a wide range, but we still are all kind of in this vertical together. But I mean, no, man. I mean, like some days, like I tell you, I talk to my coworkers and people at the gym. That's kind of my main like social 100 odd people I run into. But I have noticed since January, like long story short, about 2 weeks ago, I have a coworker who's kind of just in and out, does his stuff, wife, kids, mortgage. Well, like 10 minutes after the shop call one day, we were just kind of talking. He even asked me, like, he told me to give him the 5 minute TLDR and the Silicon Valley Bank thing, and he kind of read up on it. And he was like, for an average, like just concert tech and concert professional in Austin, he knew. He's like, oh yeah, so like what is this reserve banking stuff? It's like they're not really backed by stuff. I'm like, well, yeah, they have stuff that's hard to sell, like real estate, long-term treasury bonds, which is a con. But he kind of understood this stuff, and I had to explain to him what was the problems with that. And then same thing, like 2 days later, my one coworker, I was like picking up an extra shift. He's like, oh, you working again to stack the Bitcoin? I'm like, yeah. He's like, you and you. So like within 24 hours, I had one colleague who was like completely up to date on like fractional reserve banking, was like within a couple of days had read up on Silicon Valley, could have had a conversation with you or me. And then the next day, my coworker's like, oh, you doomsday preppers. So it is weird, man. It's just, I feel like and we talk about this too. One thing, I've beat this horse to death, but one thing, the longer I'm in these finance markets, the more I kind of treat it as almost like a Carl Jung, like Sigmund Freud type of deal. We see this, like, 2 months ago, all the Bitcoin guys were like, oh man, the SEC, everyone's coming after us, man, we got to keep our shields up. You go on Twitter in the last 72 hours, it's Coke and Lamborghini memes again, and strippers. So, but it's just like people flip on a dime so quick. And that's the thing. It's like maybe this week, everyone's kind of be like, oh, this is actually, we're starting to decouple a little bit. This is like a big boy asset, even down, we're still worth whatever the hell it is, $500 billion. but one or two macro things could go on, or Trump could say something, or Biden could say something, or Janet Yellen or Powell could come out and tweet or say something, and then we're right back down to 25K. So it's a hard one, man. I mean, and like I told you, I would definitely need to see us like by the middle of May, if we can close a solid like 35K stick. And here'd be the real kicker too. If Powell comes out and says something and maybe does another 25 basis points or a 50 basis point hike, and if the stock market has a taper tantrum to that, and then we still keep going up, that's when I could be like, okay, maybe people are finally waking up to the the game of musical chairs. But it's so hard. It's like we said, man. A week in crypto is like a lifetime, man. So right now you could say we're kind of the hot boy on the club, but this a week from now, man, we could be kissing 25K, and the whole dance starts over again. So it's hard to tell.
Yeah, that's exactly right. I was talking to a friend of mine right before New Year's, and Bitcoin has been a pretty good performer this year. But right around New Year's, I think it was like scraping 17,000. So
Around there, yeah, 18,
yeah,
yeah.
about that much, and it was all of this bearish stuff. It's like, oh, inflation's not going away, and then there's the Russia war is not getting fixed, and there's someone else is going to do nukes, or there's all this bearish stuff, and at that time, I'm like, man, the market's really bearish. I think 2023 is going to suck. Forget about crypto for like a year, and then pay attention again. And here we are 3 months later,
Yeah.
talking about, oh, I think Bitcoin will actually hit $1 million, at some point in time. So you're absolutely right. The sentiment changes so fast. In 3 months' time, now we're thinking about decoupling. Well, Bitcoin is, putting on its big boy pants, and it's going to, run one for the races. There's no doubt, though, that the government really seems to be trying to clamp down on it, right? And we've talked about Operation Choke Point 2.0 on this podcast as well. And it's starting to come to a point where I was watching, I think it was Bloomberg Crypto. So Bloomberg has a special sort of segment they do. I think it's once a day, or it might be more than. It's definitely several times a week, and it's just called Bloomberg Crypto, where some read and intelligent anchors ask important questions about the space. And there was this one guy who was an American living in London who had a portfolio company that had Bitcoin mining in there, and he serviced sort of Bitcoin mining. His whole operation was Bitcoin mining. And the anchor asked him, what are your thoughts about, the seeming crackdown that the U.S. government has with respect to crypto mining and crypto in general? And he basically brushed this question aside. He was an American living in London, basically just doing Bitcoin mining operations. He was basically financing Bitcoin mining, and that was his whole thing. He just brushed the question aside, says, well, the rest of the world is open for business, so it doesn't really matter. He's like, whatever. So he couldn't care less that Bitcoin is, seemingly being cracked down by the U.S. government, which when you pair that with all of the other shenanigans the U.S. government has been accused of for the last few years, you could think about its bungling of the whole COVID response. January 6th happened, and the Fed said there was no inflation, and then inflation was transitory, and now there is inflation, and its response is to basically jack up interest rates at historic levels, and that causes certain banks to fail, and then Janet Yellen is dragged out, and she doesn't really know what to say. When you put all of this sort of actions by the U.S. government over the last few years, and then you throw in, oh, they're trying to ban Bitcoin, that should actually be a bullish sign. Like, oh, they're trying to do some, squirrely shit again, right? So maybe we should take a look at the hood. If they're trying to ban it, there must be something to it, right? So it's almost like paradoxically bullish that the government has an obviously hostile stance. I don't think they can actually constitutionally make it illegal. They could, of course, do this whole choke point 2.0, which they're doing already. But, now we're living in an age where people call this shit out right away. And there's enough supporters in positions of power to like make noise about it. And I don't know to what extent the government will do damage to the industry before they finally let their feet off the accelerator here, which they have to. Like the people are just not going to put up with this amount of heavy-handedness. But the rest of the world seems to be moving on. The rest of the world doesn't really seem to care. Do you have a sense here of like if this Operation Choke Point 2.0 is doing real damage? Is it bullish for the industry? Is it neutral? Is it bearish? What are your thoughts there?
Yeah, I think I've mentioned this before. It's kind of the TMZ effect. I believe people call it. It's like all publicities. The same thing. TMZ is not talking about you and me. It's what Britney Spears, Trump, Justin Bieber did this week. Why? Because they're somebody's. People put a name to a face. And same thing. Like even I would say when I got into space in 2017, we were still a cute pet rock. Like we kind of joked about it. Like the ICO days, it was kind of Wild West, fast and loose. Like yeah, like some of the stuff. I think EOS or whatever had to pay whatever they raised like $500 million in ICO money from Ethereum, had to pay like a $30 million fine. So it's just like any other slap on the wrist. But they kind of just like everything fast and loose. And like we saw the last 6-12 months everything from Three Arrows to FTX. I mean, like I said, I had my aunts asking me like they knew what FTX was and who's this Sam Bankman autistic freed guy. But it's like 5 years ago we were far in the wind, and now people, like I said, I always joke, but it's like if my aunts and my mom are talking about something, it's kind of grabbing people's attention. And yeah, it's funny you mentioned that because, like we said, the last 36 months, the U.S. is, pancake, for lack of a better word. They flipped it over and it's pretty burned. It's taken on flames. Like you said, they had about, 12 different stories on inflation. And now they're basically like, well, we're wrong, but we're not going to talk about that. Like a lot of other things in the last 36 months. Same thing, too. It's like they've been cooking a lot of numbers on unemployment and CPI. And then, like I said, they've been flipping the hotcake of inflation 20 times backwards. And I guess like a good segue on that too, recently there's been a lot of headlines that, kind of slowly then suddenly, there's a lot of major countries right now that are kind of like, oh, these idiots at the US Fed, they're basically a drunk captain right now and they don't care if they're going to the eye of the hurricane. We should, maybe Russia and China, aren't the best people, but sometimes the devil don't know is better than the devil and there's I believe it's like Malaysia, I'm forgetting the gentleman's name, but the Prime Minister of France, he gave a speech a month ago and I saw a little excerpt with captions obviously, but he was entertaining that he didn't really say he's like F the US dollar, but he said my goal is to worry about my constituents, whether it's the US dollar or Russian ruble or Chinese yen, whatever. It's like I'm going to do what's necessary. Same thing with Saudi Arabia. And it's obviously it's not like all shit has hit the fan, but you're starting to hear whistles of other countries like, hey, this whole US dollar Ponzi scheme, the music's slowing down and I want a chair right now. And I guess that's the reason I bring that up. It's I find it funny how like we said, Operation Choke Point, 2.0 has kind of been going on for 3 to 6 months or whatever, and where it's like, we got an election coming up. You idiots have changed your tune on inflation and CPI a million times, and now like this isn't bumfuck countries like Zimbabwe. This is like major countries in the UN and world trading powers are like, all right, the music's slowing down. I don't want to play this musical US dollar chair game anymore. So I do think they're still looking at us. We're not a far in the wind anymore, but I do find it funny with so much going on that there is that underlying tone that the Fed and the U.S. government is going for Bitcoin. It's like you guys have about 10 other things on your bucket list you should be worried about right now, because same thing too. It's like I forget the gentleman's name. You said you were watching on the Bloomberg piece, but that's one thing too. We've had an international economy for basically the last 2-3 decades or whatever. So it's also good and bad, but it's like if the U.S. economy does something, that's the beauty of Bitcoin. You just need an internet server, and you can send it to Australia, Singapore, wherever. So that's the thing too. It's like we're almost at a point now where even though the U.S. government might be worried about us with the choke point, it's like we've lived in an international economy for 30 years, and the rest of the world's starting to pick up on that too. So it's like I'd be worried about our ship leaving the dock when yours is taking on water right now, which is my ironic response to it, I guess, that they're so worried about our ship when theirs is taking on water right now.
Yeah, I hear what you're saying about the de-dollarization debate that's been happening. That's been all over Twitter the last few weeks since the banking crisis started, and since the response to the banking crisis was the Fed creating the BFTP program, which essentially is, according to some commentators, a invitation to print even more money. Let's just all remind ourselves that the total value of the assets that the Fed has under its sort of umbrella right now that it owns is about $8.5 trillion. That's just an insane amount of money. That it's just holding a whole bunch of securities, mortgage-backed securities and treasuries as well. And it's ostensibly quantitative easing. It's doing QE, but then it also gives banks the liquidity. It needs to be able to satisfy their reserve the requirements, right? Because everyone's taking money out of banks and putting them into money market funds. And ever since that started happening, people are looking at the whole monetary system that is the U.S. dollar and thinking, well, number one, the U.S. has really, pushed its weight around quite a lot ever since the collapse of the Soviet Union, with, sanctioning whoever they want to sanction, and then they went ahead and sanctioned Afghanistan when they pulled out, when the American troops pulled out and the Taliban took over in like 2 minutes. And then also when Russia invaded and then just basically seized all of Russia's money in the central banks that were held in Europe. And China's looking at this, and other European countries are looking at this. I'm like, well, the U.S. has proven that it can fire the bullet in the chamber, the dollar bullet, so to speak, where they just decide to take your money, if they don't like your policies. And, they're looking at this, they're like, well, we can't live in a world where the United States, lurches from one political extreme to the other political extreme. Well, Trump comes and Biden comes, and who the hell's going to come after Biden? How are politics?
My aunt's dog.
Yeah, so they have a lot of trepidation dealing with a country that has so much internal division, for one thing. That seems to be screwing up its monetary network, secondly. And whom they don't really know, what are their policies going to be in the next few years, right? So just case in point, the U.S. made a deal with Iran when Obama was president, and a lot of European companies were getting ready to start doing, business contracts with Iran, and they had built up their capabilities. And then Trump comes along and says, no, we're not doing that anymore. And a lot of those companies lost a lot of money because they've been preparing to invest heavily into Iran, and they were sort of upscaling their deal flows and signing projects and everything, because all of a sudden that was just going to be allowed. And then Trump says, well, Trump comes along and says, no, if you do business with Iran, we're basically just going to blacklist your company. And of course, if you're a European company, that's just completely impossible to deal with. So you have no choice whatsoever than to bite the bullet and pull out of the deals that you had wanted to do when you thought Iran was going to be opened up. So if you're any kind of a developed country looking at these sort of behaviors, this is not the behavior of a stable, dependable partner that is treating its monetary network, which is a global reserve currency, which is the US dollar, treating it with the respect that it deserves, right? Because you have to treat these things very carefully. What happens if, if Bitcoin had some sort of a random feature where, like, every randomly we're just going to print 1 million more Bitcoin, and you're never going to know if it's going to happen or not going to happen. You can't predict it, right? Every now and then we're just going to like randomly delete, 1,000 wallets, right? We're not going to tell you when it happens. We're just going to randomly do it. No one would use such a monetary network, right? Because they want stability, they want predictability. But with the U.S. dollar, through a combination of bad monetary policy and just playing politics with money, a lot of people are looking at the system and they're like, we need an alternative. And I don't know that an alternative has actually emerged. I don't think that anybody trusts the Chinese to start using the renminbi, because any sort of chicanery and, horse crap that the U.S. gets up to with its own monetary network, you can be sure the Chinese are going to ramp that up to a 10 and do that, 10 times worse. I think it's far too premature to say that Bitcoin will fill that role. I don't think that we're absolutely not there yet at all, not in terms of like just the baseline, net asset value. I think we need a market cap that's in the many trillions of dollars for it to even think about being a reserve currency. So we're not there yet. And we're not also there because there's many countries sitting on the sidelines not really knowing what to make of this thing. Right.
Mm-hmm.
I think a lot of countries have finally realized, this is an alternative, layer of a monetary system that we could use. But you're right. I mean, there's a lot of this de-dollarization thing happening. Do you think that this is just, there's been a split amongst Twitter, at least. There's a whole contingent of people that are saying, you guys are just pearl clutching. The, U.S. dollar is now not going anywhere. The renminbi is not going to take over. You guys are just, being paranoid, and, it's the Bitcoin maximalists that say the dollar is going to zero and, Bitcoin is going to take over. So do you have a sense of like the speed at which this may happen? Is this even going to happen, or are we just, stuck in our own echo chambers again?
It's I know I've said this too, always just like broken record stuff, but the biggest thing like COVID showed me is like anything is possible or nothing's impossible until it happens, you know, or yeah, anything's impossible and then it does happen, you know. Same thing. I think if you told people in June of 2019, 6 months from now, you were going to be on house arrest, the whole economy is going to be held together by one thread. But like we're laughing now because thank God we made it out of it, and like thank you know, obviously a lot of stuff happened with COVID, but it was not the Black Plague, thank God. Like if it actually had
Mhm.
a lethal 5-10% hit rate, like we could literally be in Mad Max right now.
Yeah.
But then same thing, you know, people say the real virus was just all the country's reaction to it. You shut down everything, you print half the money that's ever existed, but people are still buying stuff, and everyone wonders why everything from housing, cars, blah 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 went up. And that's the thing too. I forget who in the chat a while ago shared it, but there was that one graph of just the longest reign of every currency, and I forget it was one of them. It wasn't Spain, was it Portugal? It was one of them that had like a 600-year run. I wasn't even aware of, or was
Mm.
it? Croatia. It was. I don't know if
I
you
don't
saw in
know.
the chat. Someone posted, but long-winded point. A lot of people at home might not know this or know this. The average currency only lasts about 300 years. Average
Yeah.
nation only lasts about 300 years, and you know, U.S. is coming up on that almost in my lifetime. You know, and so it's not one thing with the maxis. Like I get annoyed. They're supposed to be like kind of like facts, monetary, fiscal, intelligent people. They're like, oh, the dollar could possibly fail. It's like, well, statistically, it's going to fail eventually. Anything that's ever been a currency, a reserve value, whatever the hell you want to call it, it's all eventually gone to zero. You know, it's just when, not if, when. But that's the thing too. It's like you know the U.S. dollar has kept this Ponzi, or the U.S. government has kept this dollar Ponzi going on. You know, let's call it at least since '71. So we're going on 50 years now. And we talked about it too. You know, we got a lot of guns and tanks and nukes. You know, unfortunately, whether you're anti-war, pro-war, whatever. And you know, we were talking about this a couple episodes ago when Peter Schiff had that debate about, you know, is does China have enough of the Amazon effect to keep it going, or do we have enough guns and tanks to keep it going? And that's what does scare me. It's like I could see in my lifetime where the dollar does unravel and countries stop taking it. But like we said, the U.S. dollar is a big octopus with its tentacles all across the globe. It's not going down without a fight. And even
Mm.
though I am partially patriotic, I am not a fan of just how international we have been in the last century, just how much bullshit we've started, how we've intervened with a lot of areas for good or bad. And same thing too, if like I said, you know, they're like a panic dog. If they realize, you know, the music's slowing down, they're gonna go swinging and take a couple bodies down with them, and how that affects the average citizen and citizen internationally. And you know, same thing, like you said, a lot of maxis are barking on Twitter, you know, praising for the fall of the U.S. dollar. And like we've talked about this, if we even hit, you know, they always say if America catches a head cold, the rest of the world gets pneumonia, you know. So it's like if we've seen it, you know, we get slight inflation here, 10%. Turkey and Argentina have over 100% year on year inflation. You know, they've had that before, but you know, COVID expedited that on steroids. And that's the thing, like you said, with these maxis on Twitter that have been barking. They're like, oh, yeah, here comes the end of the U.S. dollar. And again, it's going to eventually happen. But if it happens by the end of the decade, we've talked about this. To hell with your gold and Bitcoin. You better have, you know, bottled water and ammo. Because, like, if the U.S. dollar hyperinflates by the end of this decade, we're going pure Mad Max. So I pray to God that doesn't happen. But like I kind of started this rant on, the scariest thing for COVID was me. It wasn't even COVID or the money printing. It just showed, like we said, with technology and just the pace of the world, stuff that used to maybe take 50 years to unravel can happen in 3 years now. So it's like, you know, by the end of this decade, all of us could be speaking Mandarin. You know, it's just like we've always said, it's like no one knows because shit moves so quick now.
Yeah, I know that's a good point. The SVB bank, for example, I keep telling people this because it has changed the way people have been pricing in the risk of bank runs. Where in the past, if you wanted to do a run on your bank, you would just go to the bank and stand in line, and you'd bang on the door, and you'd take your money out, right? But now you could just do that with a phone, an
Mm-hmm.
internet connection, and your phone or your laptop is all you need to be able to wire money out. And in the 24 hours before SVB collapsed, they had 25% of their entire deposit base leave in 24 hours, and that was a combined total of $42 billion in one day. Even JP Morgan cannot survive a
Mm-mm.
24-hour withdrawal of its deposit base. Even if they're better capitalized, they just can't, no bank can survive that at all. So that's one of the you're exactly right. It's one of the points to be made for Bitcoin going up a lot higher from here, in my opinion, because it's not like bars of gold, right? Even though central banks are buying a ton of gold these days,
Mm-hmm.
they've bought a lot more in the last couple of years than they ever have, in the last 10. Um, it's a lot harder to be able to load up on gold than it is to be able to load up on Bitcoin, right? You could buy, $10 billion worth of Bitcoin in 24 hours. Hell, you could just buy it with one big, one big
Chunk,
buy
yeah.
order. You could do that. You'd probably kill the market, or the market would be too thin to deal with it. But you could do that easily. You could just say, hey, here's 24, here's $10 billion, $1 billion, whatever. Buy me this amount of digital currency, digital asset, and it can be done within 24 hours, right? Between Binance and Coinbase and Kraken and the other exchanges of the world, there's enough liquidity in the Bitcoin space to be able to buy en masse. Even though the amount of Bitcoin that's being traded now is, I think, historically low, that's a very thin market, it's still theoretically possible. I mean, the price would have to dramatically go up to accommodate that, right? And allow for more liquidity to be created that way. But it's sort of the Balaji idea of going from 0 to 1 really fast, which is
Mm-hmm.
possible in a digital world. We're seeing a lot of exponential things happen. One other example of something that happened extremely quickly is when ChatGPT got released in October, in November. It was the fastest growing, software, app, program, whatever service to go up to 100 million users. It just took 5 days, right? And they're probably at 1 billion users at this point, right? I mean, who hasn't heard of ChatGPT, a few months after it's been released, and who isn't talking about and working with AI and trying to figure out how AI is going to change everything. There's even some AI-related cryptocurrency tokens out there, although I have no idea how they're related to AI. So, things are moving extremely fast, right? So even though our sort of monkey mind has this timeline of like, well, this is how long it takes in a year to do things. It's going to take me 4 years to get this degree. It's going to take me 2 years to get this promotion. It's going to take me this amount of time to gain this much muscle in the gym or whatever it is. We're moving we're moving into a sort of digital realm where the velocity of things is a lot faster than it was, right? So even though we think, well, it takes a while for currencies to collapse, especially the reserve currency. Of course, if you're non-reserve, you can collapse in 24 hours. But maybe we're living in different times. There's we both live in the U.S. And one of the things that Balaji has said a few times, which I really relate to because I didn't grow up in the U.S. I grew up in other places. But one of the things he says quite often to people that he speaks with on podcasts, and he lives in Singapore, by the way. He lives in Singapore and India. He doesn't live in the United States anymore. Is that he reminds people that there's a whole world out there outside the United States that does not have a very good opinion of the United States.
Mm-hmm.
Here in the U.S., we're like, well, U.S. good, China bad, and we're for freedom. They're not for freedom. And Russia is evil and Ukraine is good and everything is black and white, right? But
Mm-hmm.
that's not how you think anyone in Uganda cares about the Russia-Ukraine war. They're really thinking about the great freedoms that America has that China doesn't have. They're not thinking about that at all, right? And I guarantee you, there's many countries in the world that think way more negatively about the United States than they do think about China, right? Many African
Mm-hmm.
countries have a very good impression of China, the Chinese government. They don't care about the democracy, lack of democracy, because they don't live in democratic societies themselves. So they don't look at China through that filter like the U.S. does, or like say UK does, or a lot of Western Europe does. They look at it just from a filter of like, well, what can I get out of this trading partner? And historically, unfortunately, the history with the U.S. has been that it's been an unreliable partner. And it
Mm-hmm.
has been also a partner that will just abandon you when it's no longer in their interest. I
Yep.
mean, the Iran deal is an excellent example of that, where Obama, took a long time to negotiate that and did it with the Europeans, and then it was finally ratified and was done. 2 years later, the whole thing is thrown out the door, right? in the same way, the way that the U.S. has involved itself in the Ukraine war has left a bad taste in the mouth of a lot of people in Asia as well. Like the Indians don't want this war. They're not very happy about having to choose sides, and they've resisted that. So all that being said, I mean, could it be that there's a lot of countries that would be more than happy for the U.S. to lose its position as being the owners of the global reserve currency? I mean, there's definitely no love lost there. There's no like people are sitting around pineful. Well, what will the poor Americans do if we don't use their dollar? Right? They're not thinking about that. So your point is like well said. That this could happen like really fast. Do you think it could happen like within like a decade, or are we talking about a year, or are we talking about 5 years here, or?
Yeah, like I said, after COVID, anything's possible. I would say within the next 36 months, if the dollar, let's just say, hyperinflates and everyone says no mas and they shake their hands, they go to India, China, Russia, pick your poison. I think that's in the same probability camp as Bitcoin hit $1 million at the time. So I think it's very low. So what are we sitting at now? Basically middle of 2023. So that gives us about 6 years and some change by end of the decade. I could see where maybe, let's say, this thing we call the US dollar hyperinflating, let's say it's a baseball game. I could see we're in the fifth or sixth inning by that point because shit moves quick. And like you said too, I think a lot of Americans live in a bubble. One thing I am grateful for, when I first got out of the Northeast, I was down in Florida for a while and I spent Miami. And one thing I always tell everyone: if you can spend 2 weeks in Miami, it is the weirdest sensation, because you are obviously in the U.S., but you do not feel like you're in America, because you get a whole mix of people down there. You get Caribbean folks, you get Latin American, Central American folks, and like one thing that's funny too is I can just, like, for example, we're in Austin, obviously a lot of liberals, very blue city, and it's funny, I will talk to some people and I can tell they never like actually talk to people, because I guess it's Latinx now, even though I don't know a single Hispanic person that uses that word, but they'll talk about the Latinx community and all this stuff, and I'm like, I can tell you've never talked to Hispanic. They're like, what do you mean? Because same thing, a lot of Americans assume that like they're liberal and stuff, but if you talk to, like, especially like Cubans, Cubanos, like down in Miami, they are hardcore, like they love Trump. Like people think Texans are Republican. Bro, go down to Miami, they love Trump down there. And it's not even as much that they love Trump, but like they've seen what happens in a lot of the Caribbean countries, Central America, places like Ecuador, El Salvador, Honduras. When you give the government too much power, it turns into hellscape Russia really quick. And same thing, America, we're really uneducated even until I got down there. Man, like I had a friend, Jose, he would tell me horror stories like the TLDR. Basically, when he was growing up, he was in a half decent area, kind of like what we would call America, the middle class. But he had some buddies that were kind of like, for lack of a better word, gangbangers. But he would tell me stories like where he wouldn't associate with certain people because if something happened and you air quote had to call the police, well, you couldn't really call the police because whoever you had issues with and the police, there was like a 90% chance that they're the same. The thing is, the gangs and the police in a lot of these countries, and I assume it's other places around the world, they're the same thing. And in America, it's obviously there's a lot of tensions around just monitoring the police, having like reform, a lot of stuff. That's a whole other thing. But like and we take that for granted here, where a lot, like you said, a lot of places around the world, they're not even worried about that stuff because they're just worried about day-to-day survival. And like you said it too, like I think that's the thing in America, there's such a bubble here, and I think a problem with that too is a lot of adoption up to this point has been through America. And Alex Gladstein talks about this a lot. He thinks that the real click, whatever we're calling this hyper Bitcoinization, it's going to happen with other countries because, like you said, they're not whole Russia, Ukraine, China versus India, China versus America. They're like, I just need to take care of my family in the next 2 to 3 months, and that's what I could see where like I said, we get to maybe the sixth inning of this thing we're going to call the U.S. dollar just hitting. High inflation or hyperinflation, whatever we want to call it. Same thing, a lot of African countries, could be places in South America. They basically, maybe they take some other countries and maybe they had dollars or CBDCs, whatever, and then whatever 10% they're left over, I could totally see whether it's the actual governments themselves or the citizens taking 10%. And like we said, there's not that much liquid Bitcoin right now. So you have 4 or 5 countries, 10% of their user base population trying to buy Bitcoin at once, even 10%. Like we said, you get a spike up really quick. But yeah, I mean, if that happens in the next 3 years, I would be amazed. Between now and 2030, 2033, I would say that probability is over 50%, though. Wouldn't surprise me at all.
Yeah, I mean, if it does happen, right, all of the pieces are there. People will look back and they're like, well, this is why it happened. And it would make perfect sense. It would, people would be like, well, the US threw its weight around, it printed, how much is it now? $32 trillion of debt now.
Some
It's
that effect. I lost track too. It's crazy.
some insane amount, right? An amount like I think I was telling you last time. Biden's new budget, which he proposed, has $1 trillion of deficits built right in. Right, it's like right in there, like not even like trying to balance the budget or thinking that this year our deficit will be less than only 500 billion. Right, it's like they're not even trying anymore. So every year we're just going to add another trillion to the thing. So that's one thing. The sort of unfavorable impression I think that most people have of America in most of the world is a thing. The political strife we have in this country, where we just can't seem to hire or sort of elect competent representatives. Whether or not that's Trump or Biden, I don't think either of them were particularly dynamic or competent people. They sort of got voted into power based on sort of almost identity politics, right? I mean, Trump was all about, well, make America great again, and keep the Mexicans out, and we have to do all this stuff, to make America great again. And then Biden was like, well, if you care about abortion and you care about gay rights and trans rights, then you should vote for me. And if if you're a woke person, you should vote for me. So this political divide is part of the problem. The military adventurism that the U.S. has engaged in the last 20 years, and it just seems to be getting worse, right? I mean, it's been over $100 billion that the U.S. has given to Ukraine, and that's not going to slow down until there's actual peace. Some sort of peace accord is signed. So if the U.S. dollar does lose its reserve status in the next 5 to 10 years, all the historians and economists would have been looking at all of these factors today, and they're like, well, obviously, duh, what else is going to happen, right? So it's almost as if the cake is baked, and when it gets out of the oven is just up in the air, right? But it's almost like in a game of chess, the U.S. dollar has been at least checked, right? Now, I don't know if it's checkmate, but it's definitely undergoing some headwinds now. Like there's people now, countries that are signing deals and agreements based on local currencies. This has happened with multiple countries now. France, for example, did an LNG deal with China, of all people, right? That was settled in yuan. Russia is now doing business with China that is being settled in yuan. India is doing the same thing. I think Brazil did a deal as well recently with yuan as well. I think Malaysia and I think it was in Indonesia, some other countries were doing, not yuan, they were just using their own local currency. So it's almost like the world is struggling to come out from underneath the US dollar hegemony, because they're just sick and tired of having to deal with, this problem, right? And it's become a problem, right? I mean, all of last year, for example, the U.S. dollar was extremely strong because the interest rates were going up, and people were buying treasuries, and there was a demand for the dollar. This created a lot of havoc for third world countries because all of their debts were denominated in dollars, and their local currencies were getting weaker as a result. So they actually became even more indebted. And these, you could look at these countries and like, well, being on the dollar system didn't really help them at all. So I agree with you, man. I mean, I think all of the pieces are there. Like when it happens, I have no idea. But if it does happen, everyone will look at the events that have unfolded over the last 5-10 years, with the U.S. debt and the politics and everything else that's going on. And they would be like, well, obviously it was going to fail. I mean, the car has, two flat tires, the headlights don't work, the steering wheel comes off half the time. There's nothing, it's low on brake fluid. I mean, do you think it's not going to break down at this point? If it survives, it'd be a miracle, right? At this point, it can still survive. And it's just we resist the idea that something as fundamental as the U.S. dollar is, in danger, because this is all we know, right? It's all we've known for 80 years, right? I mean, not that we're 80 years old, but our parents and our parents' parents, dealt with this regime, and it's difficult to look at a regime that has lasted as long as it has and has been as successful as it has, because it's been successful. Let's make no bones about it, and think that it may be on the way out, right? And that exit is usually not peaceful, and it's not without pain. And I think
Mm-hmm.
that's part of the resistance that we feel when we hear about these conversations. Like, oh, those guys are just sort of, pearl clutching or catastrophizing, or they're Bitcoin maxis because they want Bitcoin to be the reserve currency. I don't think I'm any of those things. And yet I still see the signs myself. I'm like, it doesn't look good for the US dollar because the sentiment is bad, right? If you could just put a sentiment number on it, forget about the mechanics of it, right? The people just are sick and tired of the system, right? They're just like, the US government has no control. They have weaponized their monetary system. So it may just be time to move on. I do have a question for you that's a little bit of a slight subject change. We started covering the banking crisis here on our channel as soon as it emerged, and we made an episode describing what the problem was and why Silicon Valley failed. It's been a few weeks and there have not been any more banking failures. So in your estimation, is problem solved? I mean, problem fixed? We have nothing else to worry about. We can just move on. What is your take on the whole banking crisis and where we are with that?
Growing up in the Northeast, one Irish piece of wisdom I always grew up on my deathbed: shit runs in threes. So when stuff's running good, milk it. But one thing happens, you can bet your ass, two more things are going to follow. And I mean, it was kind of like with crypto. We had that good 6 months. We took about 6 or 8 good bullets to the chin between, like we said, Three Arrows and the BlockFis and the, Sam Bankman-Frieds of the world and Celsius and Terra, all that blowing up. I was like every month or every 2 weeks, it was bang, bang, bang. And, now we're kind of chilled right now. Obviously, price went down. Like we said, we're back up. But it was kind of like 6 shits runs and threes. And like we said, it was within, a 2 or 3 week window. We had about 6 banks, blow up. And I think there was, like we said, some smaller little mom and pops, but those were like the New York Times, CNN, Fox headline ones. So it might not be contagion, but that's my point. It's things kind of pop, and then it's kind of like the next layer of stupidity. It's I guess kind of just like with a military academy or anything else, you kind of have the tiers of people. All the weaklings get cut out the first week, second week, and then, you get to the cream of the crop. It's just like a sports draft, or, obviously if a company's looking to hire people, they'll trim down from 100 to their final 10, maybe pick their 2 or 3 Apple winners. I could see, obviously, like we said, there's just a lot of macro stuff going on, even though the news is quiet. But it wouldn't surprise me. Let's just say we skate through the whole summer and nothing happens. And same thing now, a big thing, a lot of people are saying that the Fed is historically, if you look at data, that we've gone from 0 to 100, even though it's only 0 to 5, 6% interest rates. Historically, in the last decade, that's like going from 0 to 100. So some people are thinking, hey, they're going to pause a little bit, just keep it going sideways, maybe bring it down, 25, 50 basis points and let it chill. But then if they still see that, Jerome Powell is really gung ho on kind of, putting his brick in the legacy of, U.S. history, if by end of August they don't, see any improvement, they, hike it maybe even another 50, 75 basis points, that could kind of be the trigger. Because, we were doing fine till we were around 3 or 4% interest rates. And then when they started doing those last couple, I think it was a 50, 75, and then it was followed up by a 50. That's when we said, like I said, shit hit the fan, runs in threes. So I think right now stuff is steady, as then there's so much macro shit going on too. Everyone's distracted from everything still. But it wouldn't surprise me if maybe by the summer, interest, the economy, job report, whatever bullshit, metric these idiots are looking at isn't at their bar metric. They raise it, then we could see, like we said, that let's call that the D tier of risk, and then it goes to the C tier. What banks, what entities are going to get involved in that? I can't tell. It's like a Lynn Alden, like a Kathy Woods, a real smart person question. But yeah, I mean, like I said, it was like the crypto thing. We kind of had a 4-ish month hiatus. It was this, let's call it the start of March. And like I said, that would put us around mid-July going to August. And like I said, if, Jerome Powell and all them, he's, kind of driving the seat of this pant, building it while he's flying. And it wouldn't surprise me, like I said, if they're like, oh, stuff isn't going well, we're just going to do another 50, 75 basis point. And the same thing, Warren Buffett when the tide goes out. Well, the tide might go out another 10 feet, and we're going to figure out again who's skinny dipping. So it's same thing, gun to head. I couldn't give you any names, but I would be dumbfounded a year from now if there wasn't, let's just call it a round two of bank failures.
Round two. One of the things I've noticed is Warren Buffett is being very quiet these days. You realize you don't really hear him on the news anymore. No one's like calling him and asking him about his
I was
opinion.
gonna say, if I was his age with his net worth, yeah, I'd just be chilling in the middle of Omaha, just reading the newspaper, going. I don't know if it's still real, but there's that joke every morning he gets in his Cadillac, like his '83 Cadillac, and goes to McDonald's. But it's like, yeah, I mean, Berkshire Hathaway's on autopilot at this point. It's like, yeah, if I was him, I'd just be in my mansion chilling. Why interact with all the circus?
Well, it could be that he has nothing positive to say,
Yeah.
right? I mean, when people call Warren Buffett and ask for like his take, I think subliminally they're looking for some kind of reassurance. They're wanting they're
Yeah.
wanting Papa Warren to say something, like positive about the U.S. economy, which he does all the time. By the way, he provides that in spades. He's extremely optimistic about the U.S. Entrepreneurial class and the U.S. economy, and he keeps saying, yeah, there's always, we have bad times, but those are followed by good times, and blah blah blah,
Mm-hmm.
and there's always money to be made. I mean, he's very, he's not a Doctor Doom kind of guy at all, right? And it could just be that he's got nothing really great to say right now, that we're just in a mess, which it's kind of surprising, right? Because in a situation like this, he would be like, let's get a microphone for Warren Buffett, and he's going to tell us how everything is just fine. Because sometimes it almost feels like he's sort of like an arm of the government, like a spokesperson for the U.S. economy. Almost. He doesn't have any official role at all, but whenever shit hits the fan, everyone wants to know what Warren Buffett has to
Well,
say. But
well, it's funny you say that because he was kind of arm of the government in 2008. A lot of people don't realize this. Hank Paulson, I don't know exactly the whole details of this. I'm going to butcher it a little bit, but one of his assistants or somebody was like, "Hey, I knew Bobby who was talking to Warren Buffett. He kind of had an idea, and originally what they were going to do with that TARP money is kind of just shotgun in the market." And they were like, "Well, we don't know what's the next thing to catch on fire because same thing, like it was like bank after bank, the contagion was spreading." And some Bobby or someone who knew Hank Paulson was talking to Warren. He's like, "Hey, he kind of has a stupid idea. Warren Buffett's not stupid, so you should probably run with it. Instead of trying to shoot 100 things, pick your 10, 12 entity banks, which became the JP Morgan, Citigroup, same thing, and inject that capital, and same thing, like we talked about, like kind of keep it hush money, but just stuff it in there. And then the markets here, hey, all the big 12 pillars, of New York, Fat Cat Wall Street, they got stuff, the turkey got stuffed. It's probably going to calm the markets. And like we saw, calm the markets. It caused a whole host of issues. But basically, part of the reason that '08 went so well, at least the contagion stopped spreading, is Warren Buffett's like, hey, you're trying to shoot 20, 30 turkeys right now. Pick your 6, 10 banks, stuff them, and then call it a night. So he, for lack of a better word, was part of the reason '08 was solved, So he kind of is an arm of the government because he's been around for a minute. The guy, he talks shit on Bitcoin, but he's not a dummy. He's worth whatever the hell. He's the Michael Jordan of finance, him and Charlie Munger. They're not idiots. So yeah.
no, not at all. I think they understand exactly what Bitcoin is and how well it works, and they're not very happy about it because it's a parallel monetary network in addition to the US dollar, right? It's kind of like a gold 2.0. And they've never been like big gold people. They've just been people who invest in productive, assets, like companies that make stuff or like provide services or insurance or whatever. So that's their, investing strategy. They're not just investing in things where the number will go up. They're investing in things where they feel like something is being made, a service being rendered, and that is a long-term sort of growth engine for the value of the asset, which you can't really make that case for gold and or Bitcoin. So they understand exactly what it is and what it does. And maybe they feel a bit threatened by it, which is why they keep talking against it, right? You know, I don't think Charlie Munger would be wasting his time talking about it as much as he is if he wasn't somewhat worried about it, right? He's not talking about, some, BS stock, like, whatever ARK Investments ETF or whatever, right? He's talking about like, something with, an actual potential danger of encroaching on the fiat monetary system, right? Which is not probably good for his own bottom line, right? So anyway, coming back to the banks, I'm actually somewhat surprised that there has not yet been another banking failure. And the reason is that one of the things that got exposed during this, set of banking crises is that do you know what a money market fund is? Not everybody knows. So before I get into that, I just want to make sure you understand what a money market fund is. Are you aware of that?
Yeah, basically, almost for lack of a better word, or like an escrow or
No, it's not an escrow at all. So you know what an ETF is, right? It's basically just a basket of stocks
yeah,
that
like the
a
ARC
person
ETF.
manages.
Yeah.
Yeah, exactly. So and that ARC ETF has a basket of different stocks within it, and it's balanced, quite regularly, like every at the end of the day or end of the week or end of the month. The people who are managing the ETF will like, well, we're going to take some Apple out, and we're going to put some Roku in there. We're going to take Tesla out, and we're going to put this other one in there. So they keep balancing it up, and you buy shares in the ETF based on how well you think the collection of stocks, has been curated by the people running the ETF, right? So that, and then they take a cut for they get a cut for selecting the stocks and maintaining the different ratios. So a money market fund is similar but not entirely the same, where the basket of assets is not stocks but it's actually U.S. Treasuries. And so that's all it is. It's just it could be also corporate treasuries, but let's just, for the sake of conversation here, just assume that we're talking about just U.S. Treasuries. Now, U.S. Treasuries that are 3-month long duration or 6-month long duration or 1 month long durations could all be part of a money market mutual fund. Now, the problem is that it's not a problem. You yourself could log into Fidelity or Charles Schwab or any number of different sort of financial banks or brokerages, and you could put your money. You could take it from your bank, and even if you banked with J.P. Morgan and you wanted to move money from your bank account to a money market fund within J.P. Morgan, then what you would do is you would just buy a share of a money market fund, like an ETF, for example, right? And then the thing of it is that that share would be able to yield you the same yield that, Jerome Powell is saying, well, we're raising interest rates, right? So if you put money into a money market fund, you are these days making something like 4 to 5% interest on the money you put in there, because they're basically just invested into short-term U.S. Treasuries, which all are yielding 4 to 5% depending on the duration, right? So a lot of people have realized that, well, if I keep my money in just my bank account, just the normal bank account, I'm, earning almost no interest at all, because the banks don't give any interest at all. But if I just click a few buttons and I move it over to a money market fund and I lock it up, say for 6 months or 8 months or a year or whatever it is, I could be earning, 4 or 5% on that money. And a lot of people have realized that, and as a result of that, many people are moving their money from their bank account and they're putting it into a money market fund. And remember, the underlying asset of a money market fund is U.S. Treasuries. So as long as you believe that the U.S. government will still exist today or tomorrow, and it will still pay, and it can, because it can just print the money out of thin air,
Yep.
it will still pay you the 5% interest rate, then why the hell would you ever put money or keep money in a bank account when it has been demonstrably proven that banks are no longer the safe, sort of place to put your money that we were all told that they were, right? The expressions as safe as in a bank, I mean, that just, it does not exist. And the regional banks are the ones that are most vulnerable to money leaving their bank accounts and going to money market mutual funds for two reasons. One is people don't have as much confidence in the small banks as they do in the large banks, which have to be better capitalized. So if you're, and the U.S. government is just not going to let J.P. Morgan, for example, fail. That's just not going to ever happen, right? So if you're going to risk your money in any kind of bank, you're just going to use a large bank. So that's one reason money is leaving regional banks. But the second reason is that the money offered in money market funds is so much higher. And at the same time, this other bank, regional bank, could fail, and it's not giving me any interest. So there's so much delta from just clicking, a few buttons on your computer to moving a money out of, like Joe Schmo Bank of Littleton, Colorado, whatever, like small bank in the middle of nowhere, America, moving it from there to a money market mutual fund. That people are doing that in droves. And every day that passes where the interest rate is whatever, 5%, whatever it is, dollars are leaving small banks and going over to these money market mutual funds, which, by the way, cannot be rehypothecated, like, because you're actually buying treasuries, right? So the bank or the brokerage can't just take the treasuries that you own, and they just can't like lend them out like they can do with cash, right? So then a lot of those funds are actually deposited with the Fed itself, so they're not even deposited with the bank. So the bank literally doesn't have much control over those treasuries once you buy them through the bank or the brokerage. They can't do anything with that. That money has essentially left their system in a very real way, and it does not service the reserve capital requirements at all. So every day that passes where this is the reality, money is leaving a regional bank and going into U.S. treasuries. And this is something that everyone woke up to once the interest rates, the short-term interest rates went above 5%. They're like, 5%, that's a pretty good amount of money. If I just want to park it for 6 months in an economically uncertain time in a safe place, why don't I just do that? And people are, and every dollar that goes out of a regional bank is $1 that they have less in reserve now, which means they're $1 more vulnerable than they were 3 weeks ago, and they were already pretty vulnerable 3 weeks ago. So, this is what brings me to, my earlier statement. It is, I am surprised that there hasn't already been another banking failure already. And I think it just could be that, the Fed moved in to plug holes, but I think all 10 fingers and all 10 toes are busy plugging all the holes that are in the banking sector. And I think, it's only a matter of time before another failure occurs. And the problem with these failures is that in the age of the internet, fear spreads really fast, and confidence in the banking system overall could suffer tremendously. And we're basically just one bank away from the whole circus starting up all over again. Had you even heard of Silicon Valley Bank before this all happened? I never heard of it. Right?
No, and what was the other one? Signature up in Boston. They were same thing, but they were up in the Northeast on par with Silicon Valley, and that's the thing. It's like there's just so much just money and shit out in the world. But same thing when this stuff happens, when I heard of Silicon Valley Bank, I'm like, oh, there's like a mom and pop. And basically all the blue chips out on the West Coast, they work. So I was like, how have I never heard of these guys? Like same thing. I'm like, they took on water in 72 hours. And like you just said, it's just the speed of stuff now. It's dumbfounding.
Yeah. So I do think that another bank failure is in the works. And I think if the Fed has any brains, and let's God hope they've been thinking this through, I would hate to think that Janet Yellen and Jerome Powell are sitting, I think we're out of the woods. I say all this because you were saying earlier that, maybe they'll raise another 25 points, maybe they'll raise 50 points, maybe they'll even do another 75 from, not all at once, but going forward. And dude, I just do not think that is absolutely, because of the whole money market fund, siphoning, that it's another dollar milkshake theory, basically, where the dollar is being siphoned away by treasury bills. It's already, the delta is already so extreme today, right? If they raise by another 25 basis points or 50 or 75, two things happen. That speed or velocity of money going from banks to money market funds is just going to go up even more, right? Because why not? Why shouldn't it, right? If they increase again in May, they're not going to drop it for at least another couple of months, right? They're going to be like, maybe they'll drop it, but it will still take a while for interest rates to go down low enough where it stops making sense to put money in money market funds, right? It's going to make sense for money market funds for the rest of this year unless rates dramatically go down, right? So as long as it makes sense, and it makes sense today, even before there's another interest rate increase, banks are vulnerable. And if they keep increasing, that delta is going to get larger, and the mortgage-based securities and the long-term dated securities that these banks took on in 2020 and 2021 when we had 0% interest rates, those unrealized losses are going to deepen even further because the value of those bonds, which are yielding a measly 1.5% over 10 years, those are just going to go down even more. So those banks will get even more undercapitalized as a result of this. I think when they got to the 5, when they got to the last rate hike, they did one last one afterwards just to show everyone that they weren't scared. But when they did that last one and they saw banks finally collapsing, they're like, okay, I think we have really broken the system. if they raise rates one more time, I think they're going to be calling for Jerome Powell's head on a pike. That is how confident I am it's not going to happen. Uh, because if they raise rates and then the next day banks start failing, that's Jerome Powell's got to be laying awake at night thinking about that, right? It's like if I do it one last time and then some major bank fails as a result of that, then the playbook of banks failing has already been played out. Everyone understands in incredible detail why they're failing, and if they fail again after another hike, everyone's going to be like, you have no choice. You're going to have to let interest rates go down. You're going to have to print a shit ton of money. You're going to have to devalue the dollar. I mean, the table is set, and it's time to sort of have the chicken coming home to roost, essentially, right? So I don't know, man. I mean, do you feel that that's a viable sort of thesis here, that banks are more vulnerable than ever, and we're hardly out of the woods here?
Oh, 100%. And I was kind of going to ask you this because Lynn Alden went on a tweet storm a couple of days ago. I caught glimpses of it, but it's basically kind of what we've been talking about forever. The biggest issue, especially since 2008, but after COVID, the Fed and the U.S. government have just put themselves in between a rock and a hard spot. You either just let you do money printer on Burr, and then a pack of gum is $1,000. Like Peter Schiff was on a rant earlier today saying like stack up on gum while you can. It's going to be $1,000 a pack by 2030 and all this shit. Or like you said, they basically, put the hammer to the nail, and then like as we're seeing, you put the hammer to the nail, some of the nails are gonna start breaking. And I mean that's the hard part. Like we said, these people are idiots, and it's a weird one too, because everything you said I agree with. But historical evidence, you could argue, for lack of a better word, '08 and over COVID, they basically wanted to save the banks. A lot of people said they were saving their buddies, but like we said, this whole thing we call the economy banking system, it's a big microcosm of psychology. And like we said, which is how fast things move. If you even have a tremor, perception's everything, whether it's politicians, CEOs, banking, us, like whatever, perception's everything. So if people think there's going to be a run, they're going to pre-run the bank run, and then people are going to and then you get, like I said, to a little Mad Max thing, which gets scary quick. So but it's a weird one too, because Jerome Powell has also been banging the drum that we are going to get to 2% inflation. He's fixated on that number for a variety of reasons, but like a lot of people would agree, real inflation is easily 10% right now. The whole bullshit number, whatever, we're getting 7%. I don't think anyone or their grandmother believes that, but they got a long way to go. And like you said, we're kind of seeing right now, how do I word this? The last 12 years, the perception has been the Fed and government are interested in saving the banks and the New York City fat cats of Wall Street. Well, like we said, they raised and shit started breaking, and they're like, okay, we're going to pause here. So I think the real issue now is like, are they really going to keep going until they hit that 2%, or are they going to cool the brakes? But then another thing is too, it's like they might not raise any, but they might just coast it where we're at right now. And then that goes where I said it's like we said, there was tiers of dog shit, kind of like with like the '08 CDOs. There was the different rankings, the tranches. Like even if they coast at 5%, like I said, I would not be amazed by September if something blows up. And like you said, they definitely broke some stuff, but how do I word this? It goes back to the Warren Buffett thing. The tide goes out. These banks were probably going to blow up anyway. A lot of people joke about this over COVID. COVID didn't really cause anything with a lot of stuff. It just expedited a lot of things. Like the whole work from home stuff was probably already going to happen by the end of the decade. It's just, hey, you put half the population on house arrest, they're going to start work from home now. And like people like Sanad, other people in our group, kind of with you, it's like now it's kind of the norm for a lot of people that can afford to do so. So that's the thing too. It's like even if they don't raise anymore, I feel like the banks that did blow up, let's say that maybe would have happened 4 years from now. Now it happened. So even if they coast at this 5% we're at, even I think, correct me, was it Wednesday? Next Wednesday we have a print coming out.
I think it's Wednesday tomorrow.
So yeah, it wouldn't surprise me even if they try to do a 0.25. I do hear you how they're like, okay, our heads could be on stakes here, but it's like I think they could coast the next couple of months at that 5%. I'm like you, I would be dumbfounded by September, just a whole siege. Because same thing too, it's all these interest rates are just showing what banks are actually solvent, and like we can make an argument the U.S. government is the biggest bank in the world, and they've been insolvent since '71. So it's it goes back to the whole thing of not if, when the next shit of threes happens.
Well, let me ask you a question here. So in 2008, when the financial crisis occurred, um, what do you remember, or what do you think was the timeline between the housing bubble popping, right? Like people understanding that, well, this whole thing was propped up by these toxic CDOs. Between that popping and Lehman Brothers going down, what was the time difference between those two events in your head?
Man, I feel like I should know this because I believe some of the first CDOs started taking on water in June of '07, and I should know this because of Bitcoin was like the white paper. Didn't Lehman go under September of
Yes,
'08?
September.
So what is that? It's what are we calling that? 9 months, a year, or whatever, something like
Yeah,
that.
no, that's exactly correct. So in September of that year, sorry, January of that year was when the housing bubble popped, and it was clear that there was something deeply wrong in the housing sector. And then it took 9 months for Lehman Brothers to go, and a whole series of other catastrophes happened. It was just a staggered one thing after the other until Lehman happened, and then that was just global pandemonium. People,
Yeah.
and I kind of think that we're in a similar thing, right? Where a few banks failed, and then like we sort of paper it over, we create a BTFP fund, and everything is fine. And then there's a period of relative calm,
Hmm.
and then more shit starts breaking, right? And I think we're sort of in a period of relative calm before the next shoe drops. And I think there's a whole there's a whole Nike store of shoes that's about to drop.
Well, it's funny you say that because I know we egg on him and I kind of bring him up. I just, for some reason, like it's like almost how much Peter Schiff just talks shit on Bitcoin. I almost have like a weird like just fetish for him. But he's been beating that drum home the last. It's funny you mentioned that because I'm having deja vu now. But he said that the problem with '08 is that like kind of some stuff to regional banks, Deutsche and Bear, like they weren't scrubs, but they were like they're kind of the stepkids of Wall Street or whatever. They took on water. No one's like big deal. And Lehman Brothers, and like for people listening at home, Lehman Brothers, if that like happened again today, that would almost be like Apple or Nike disappearing overnight. Like they were the cornerstone of Wall Street. They were like 110 years old. They were like blue chip is blue chip, and they like blew up over a weekend. We joke about that. It's always coincidental. All these banks have issues on Friday to give their ass like 48 hours to breathe. But to your point, Schiff was talking about that was a couple little banks, and then slowly, then suddenly, then Lehman goes, and like you said, it was a house of cards, and it's but yeah, I mean, Schiff's been barking about that too, and that's where I agree with you. It's like I think stuff could be calm, but the problem is too is like then we're having the whole debate too after Silicon Valley and Signature Bank did the government show they're going back to quantitative easing, and it's like, well, they didn't really print any money, but they kind of stopped the plug, but they also didn't stop it. And that's the thing too, it's like there's just so many moving parts. But
Yeah.
like in synopsis, I do agree with you, stuff is kind of calm again. And yeah, it wouldn't surprise me, like you said, if September we have like a Lehman Brothers, which could be scary, like a Lehman 2.0.
Well, back in 2008, we did not have really, Twitter was not that big, if it was there at all. I don't think. In fact, I don't think we had Twitter back in 2008, did we? Certainly didn't have YouTube, as big as it was. I mean, the whole social media thing had not occurred
It
at
was a
all.
different world, yeah.
And in fact, it took like something like 2 years for like regular people to understand what happened. Like what the hell is a CDO?
Hmm.
They created movies about it, right? But whereas this day and age, like 24 hours, someone made like a infographic, YouTube tutorial about like the entire thing, right? Like
For
I
real.
said this to you before, like I'm not a finance guy at all. I'm not like that smart with numbers whatsoever. But I understand this because because if I have any sort of basic interest, it is trivial to find a highly respected and reliable, trustworthy YouTuber that I follow. Explain it to me. I'm like, okay, so and so is not going to bullshit me. I've listened to hundreds of his videos or her videos. I know they understand what they're talking about, and they're not just trying to sell me a product. This explanation is probably going to be the legit explanation. And then you have another person also explain it to you, and then you hear echoes of what you've understood on the news, and pretty quickly or very quickly up to speed, and then you're making financial decisions based on your understanding, right? So. It's going to be very interesting to see how, in a social media world, this entire thing may move a lot faster. So I was saying, yes, there's 9 months, between the housing bubble popping in 2008 and Lehman collapsing, but maybe everything is now super compressed, right?
Yeah.
Where everything sort of like gives out in the next 2 months, 3 months,
Yeah.
this might have been like Balaji's motivation behind the whole 90 days to a million, is that even if it doesn't like get to a million, or even anywhere close to that,
Real
he
quick,
was
where
making the
where are we
point.
sitting at that right now? Like 60, 50, 40 days in?
No, we're not 40 days in at all.
Not even. That's what I mean.
3 weeks,
It feels like a
3 weeks
lifetime. That's what
in.
I mean.
Yeah.
Like that feels like that's why I was asking. I'm like, are we even like a month into that? But to your point, it's like yeah, it's like 90 days in finance
three
now
weeks.
is a lifetime, man. Like the same thing that felt like 2 months ago. And yeah, to your point.
No, we're not even a month in. I'm pretty sure. I'm pretty sure we're not a month in. And then we got another two to go after that, right? So that's a lot of time in Bitcoin. And by the way, in that time, Bitcoin went from 26 or 27 to 30,000, right? It didn't drop. This has been one of the most interesting developments since the banking crisis started. Is gold went up and Bitcoin went up with it
Mm-hmm.
in a way that sort of decoupled from the S&P, which it had not done before. So, let me ask you another question, right? So if, and this is a giant if, the paradigm has changed, right? There's this phase shift that has occurred where people think that Bitcoin is no longer the risk on 1% allocation asset, but it is the safe harbor asset, right? There's like, let's put money into something that we know has no counterparty risk and it's finite and it's not going to be inflated away, blah, blah, blah. If that is how people start to understand Bitcoin in a world where there's a ton of economic turmoil, which looks like that world is coming
Mm-hmm.
faster than we think, what does that do to Ethereum or the Cardanos of the world or the XRPs? Did they benefit at all, or are people just going to turn into Bitcoin maximalists and Bitcoin dominance goes up to 90% like in the good old days?
I mean, obviously, you and I know this. A lot of people at home listening. Bitcoin goes up 5%. The alts, I mean, even Cardano and Ethereum, you could say they're in the blue chip category, but they'll easily do 10%. And then your super risk on your Doge, your Sheaves, your Cum Rockets, they'll be doing a 20, 30%. So obviously, rising tide lifts all ships. Bitcoin is the wave, for lack of a better word, the ocean. So obviously, like let's just say we get a spike candle and we go in 72 hours go to 40%. So what is that? 30%. It wouldn't surprise me if Cardano and Ethereum did a doubling in that time. But to your point too, if there was just a flight risk, a big old panic, like I said, let's just say a Bitcoin did a 10%, those things did a 30%. Well, and then just that grade keeps for another 30, 60 days. Well, maybe people go, okay, not as many people are flying to Ethereum and Cardano. This was kind of more of a FOMO pump price. I need to get on the ship while I still got a ticket. I could see maybe in 90 days where there's a not only are we decoupling from the S&P, but then there's like a decoupling where Ethereum and Cardano almost maybe, and those other blue chips, not let alone the altcoin shitcoins of the world, as Bitcoin goes up, they almost go down. I would find that really hard to believe because obviously there's a lot of bots, there's a lot of other brouhaha going on in the crypto world. But yeah, short term, it wouldn't surprise me. Like I said, we have that normal trend. And then I'd be amazed if this happened within 90 days. But by end of the year, maybe Bitcoin has a 10% daily candle. Like you said, it is that flight risk people are using. It's like, okay, maybe this isn't gold, but it's quicker, it's more liquid, blah, blah, blah. Instead of a 1%, we have a 5% allocation. It wouldn't surprise me too if, like I said, there was that D trend where Bitcoin had a 10% daily candle and Ethereum somehow was down 2%. Because, like we said, shit's moving so quick right now. It's for all we know, my aunt's dog is president this time next year. It's
Well, so you again are using the paradigm of crypto is the place you go to if you want to do highly risky things and get a high ROI on high risk, high reward kind of assets, right? And so, I think that answer is correct. That well, they'll all go up, and maybe Ethereum will go up even more than Bitcoin because it's an altcoin, and altcoins go up a lot higher. But what I'm trying to, the point I'm kind of making over here is we may be entering a paradigm now where it's just Bitcoin that's thought of as the reserve sort of asset of the crypto
mm-hmm.
space, right? And as the safe harbor of the crypto space, and not the others, right? And so if the gold 2.0 narrative really takes root and really holds, the people that are going to come to cryptocurrency are the conservative type of people who are looking for a sort of safe, non-counterparty risk kind of asset, class to put their money in. And those sort of investors are not necessarily putting money into Cardano or
Mm-hmm.
XRP or Doge or Litecoin or whatever it is, right? Especially not Doge, I hope. Um, so I'm wondering, like if the Bitcoin dominance is going to end up being a signal of how much conservatism is coming into the crypto markets, right? Because if the Bitcoin dominance like shoots up, then everyone is just piling onto Bitcoin, which has happened in the past as well. But if it becomes very extreme, it could just be a market signal saying that, conservative money is here, and there's been a phase shift where Bitcoin is thought of not as a highly risky asset, but as the safe asset in a world where banks are no longer the safe repository of your wealth, but it's actually a decentralized monitoring network run by math and code and not run by politicians and the central banking committees. Um, so yeah, I mean it's going to be very interesting. I'm not making any predictions one way or the other. I was just thinking out loud myself is if this phase shift does occur where people are thinking of Bitcoin as a safe haven place of storing capital, what then happens to the altcoins? And I don't really have a good answer to that question. My instinct says that they're not going to do much. It's all going to go to Bitcoin, which would make you happy since you're the resident maximalist in our group.
Maxi.
Uh, but yeah, man, I think these are very interesting times. I think that the markets have been somewhat quiescent the last 2-3 weeks.
Yeah.
The noise continues, on the talking heads, saying doom is here, and the Fed is going to do this, that, or the other. There's so much confusion, like nobody knows what's going to happen. I do think this summer that will be very impactful. I think this is going to be a very turbulent next few months, and I'm only saying that because of the whole banking thing, which I don't think is behind us at all. My prediction is we're going to see another bank fail before the summer is really here. Like by the end of May, another one will fail, I think. And I don't think there's going to be.
Yeah.
I don't think there's going to be another interest rate hike at all. I mean, I would be incredibly surprised if that were to happen. And if that happens, and then there's a failure of another bank, they're going to have Jerome Powell
head on a stake. Yeah.
Yeah, they're like this guy, like is fucking up the entire economy. And those things get really political, right? Because we're also now ramping up this year.
Election. Yep.
Fortunately, for another election cycle. So if things do head south, then our monetary policy might turn into a political talking point.
I don't even think might. I think it's already there. I think that horse left the barn basically like in COVID, because same thing, the second it was the vaccine stuff and the money printing, Trump was saying XYZ, and then Biden when he came into ABC, and the whole reason they're saying that is just it's a transfer of power. When there's stuff that Trump said that now Biden's saying, and then there's stuff that Biden was against now that Trump said the same thing. And like we said this, man, it's all talking points. These idiots don't know their hand from their ass. So I don't even think it's a might. It's obviously going to be a talking point because unfortunately it's Trump DeSantis. I think I heard on Twitter that Kennedy Jr. is running against Biden. And, they're going to take this whole financial thing as a club and just whack him over the head because, just whatever tools are at your disposal, you're going to use them just to fling some shit,
Yeah, it's going to be a very interesting presidential cycle. God, I'm not looking forward to it at all, man. it's like how are we already here? Another cycle has started, unfortunately. But hopefully, crypto is a bright spot in what appears to be an ongoing turbulent year. I do believe that Balaji's bet is directionally correct, and I think I told you like a couple of meetings ago that I expect to see 100K Bitcoin this year. If the phase shift changes, if it actually does occur, and people think of it as a safe haven asset as opposed to a risky asset, 100K is easy.
Mm-hmm.
I think that's super easy, and I'm hoping the phase shift occurs this year. It would be poetic, where Bitcoin was born, in a banking crisis,
Mm-hmm.
and then Bitcoin, finally came to its own in a banking crisis, right? Where it's like, okay, this thing is a thing, and there's no debating that question. It would be highly poetic if it also happened in a banking crisis. It's almost like fate has a sense of irony there. If it were to happen. So I don't know, man. I mean, are you bold enough to make a Bitcoin to 100K this year bet, or is that just 5 years out?
Dude, it's hard to tell. I've noticed this before, but the biggest thing is in the last decade, we've had 0% interest rates. So we've just had free money, free for all. Refs are drunk asleep at the wheel, blah, blah, blah. And, we've done all this right now. And the thing is, we're building the plane while we're flying it. And the whole rule book of the last 10 years is just tossed out. We're back in the Wild West. And even though I'm the resident, Bitcoin maxi of the group, I just still try to be reserved because, we just had a frat party for the last decade, and I think we have no idea what the hangover is going to be like. Or some people make the joke that you get so drunk that you don't even get hungover, you just stay drunk into the next day. And that's the thing right now. I mean, I would not be surprised if we maybe kiss 50, 60K by end of the year. And same thing, if we went down to my 10K hill, I'm still kind of crawling on. I'm definitely not standing on my 10K hill as much, but I'm still crawling on it while you, Cat, and everyone are kicking me down. But it's just so hard to tell. Like we've said, it's kind of like we make that joke, like the biggest problem with the MSNBCs and CNBCs of the world. Can you imagine if you had a guy on there, he's like, I don't know, could go up, could go sideways, could go man, like if the last time. And that's the thing, it's like I know it sounds stupid, but I just think we had 10 years of the most reckless financial policies ever, which led to the biggest bull market bubble in everything ever. I just think, like we said, even someone from Balaji to Lynn Alden, no one knows their hand from their ass. But I mean, same thing too. If we hit the 100K, it wouldn't surprise me if we kissed the 10K. And that's just, I think like a good thing to end on, at least like my final closing thoughts is like to everyone listening at home, hope for the best, but prepare for the worst. It's like whatever your thing you're smart on and you invest in, you're knowledgeable on, keep on doing that. With that too, don't be closed-minded. Look, keep looking at all the verticals on the horizon, see what's popping up, whether it's Bitcoin, whether it's a money mutual fund like you were talking about, whether it's some ARK ETF, whether it's Rocket, whatever, because same thing like you said, Bitcoin was born in a financial crisis, and 10 years looking out from now, whether it's Cardano, Bitcoin, God forbid some CBDCs are kicking, 10 years out, a lot of stuff that's happening now is going to look really obvious. But back in '08, people were like, oh, I wish I bought Bitcoin. It was just this super cypherpunk, high speculative, just crazy money thing. And like we said, now it's $1 trillion asset. So it's like, even though shit's really crazy right now, the framework's being made in a decade from now. A lot of stuff is going to be mainstream that in hindsight now looks obvious, but we're making the groundwork for stuff. So to your point, we could be making the groundwork for 100K Bitcoin by end of the year. We just got to wait 6 more months and find out.
Yeah, no, I hear you, man. I think on that optimistic note of 100K Bitcoin, we should call it a wrap. I'm sure there'll be plenty of things to talk about the next time we meet, in hopefully just a few days. But always a good conversation, man. Let's see how the rest of the summer plays out.
Yeah, definitely. All right. Appreciate it, Atif.